Guys, if you don't understand market structure, you're literally fighting the market every single day. And when you're fighting the market, you're going to lose. It's that simple. Today, I'm breaking down everything you need to know about market structure so that you can finally start trading with the trend instead of against it. So, market structure. This is literally the foundation of everything I do in trading, like everything. And I see so many people trying to trade without understanding this basic concept and then wondering why they keep losing money. Look, I'm going to keep this super simple because it doesn't need to be complicated. By the end of this video, you'll know exactly how to identify uptrends, downtrends, and when to stay the hell away from the market. And trust me, that last part is just as important as the first two. All right, there's only 3 things the market can do. Go up, go down, go sideways. That's it. 3 things. Uptrend, market's going up, we buy. Downtrend, market's going down, we sell. Consolidation, market's doing absolutely nothing, we wait. And guys, that third one is where most people mess up. You see a sideways market and think, ooh, I need to trade something. Nope, you don't. Sometimes the best trade is no trade. But here's how we actually identify these phases objectively. We use highs and lows. Uptrend, higher highs and higher lows. Downtrend, lower lows and lower highs. Consolidation, well, market's just doing whatever it wants with no clear direction. So let's break this down. In an uptrend, every time the market pulls back, it should make a higher low than the previous pullback. And every time it pushes up, it should make a higher high. Think of it like stairs going up. Each step is higher than the last. That's your uptrend. The moment we break below the previous high low, that's when I start paying attention because the structure might be changing. And this is so important because it tells us the buyers are in control. They're stepping in at higher and higher levels, which means they're confident about pushing this thing up. Downtrends are just the opposite, like the stairs going down. Each bounce gets weaker, each drop goes lower. Lower lows and lower highs. That's it. The sellers are in control and they're getting more aggressive at lower and lower levels. And guys, when you see this pattern, you do not want to be trying to catch falling knives. I don't care how oversold it looks on your RSI or whatever indicator you're using. Structure trumps everything. Okay, so here's where I'm going to probably upset some people. Trend lines are garbage compared to raw price structure. I see traders all the time drawing these perfect little lines connecting highs and lows, and then when price breaks the line, they think the trend has changed. But look at what the actual structure is doing. The market breaks your imaginary line, but you're still making lower lows and lower highs. The structure hasn't changed at all. You just drew a line that doesn't mean anything. Look, I used to do this too. I get it. Trend lines look clean and professional, but the market doesn't care about your lines. It cares about actual supply and demand, actual buying and selling pressure. And that shows up in the highs and lows, not in some line you drew. Now, here's where it gets really interesting. Every trend is made out of 2 types of moves, impulse moves and corrective moves. Impulse moves are the big, strong moves in the direction of the trend. These are where the real money is made. Corrective moves are the pullbacks, the market taking a breather before continuing in the trend direction. And this is crucial because as traders, we want to buy at the bottom of corrective moves in uptrends and sell at the top of corrective moves in downtrends. We're trying to catch the next impulse move. The key is patience. Wait for the correction, then get in before the impulse. Don't chase the impulse moves. That's how you get burned. One last thing that's super important. Wicks don't break structure. Body closures do. I see people all the time going, oh look, we broke the low. But it's just a wick. The candle closed back above the level. That's not a break, that's a rejection. For a real structural break, I need to see a candle body close beyond the level. Wicks are just noise. They show rejected prices, not confirmed breaks. Look guys, market structure is literally the foundation of everything. Before you worry about indicators, before you worry about fancy strategies, master this. Learn to identify the trend, trade with the trend, and stay out when there's no clear trend. It's that simple. This concept alone has probably saved me more money than any other single thing I've learned in trading. Because when you're fighting the structure, you're fighting the market. And the market always wins. So, what's your biggest struggle with identifying market structure? Drop it in the comments below and I'll try to help you out. And if this clicked for you, smash that like button and subscribe because I got tons more content coming that builds on these concepts.